So I'm going to start looking at Global Ship Lease again this morning with some of the financials. So this is a spreadsheet that I use where I draw data from CapitalIQ. So that's one of the CapitalIQ formulae, and I can sort of look at a company in a big overview way. So here with the description of the company, Global Ship Lease, together with its subsidiaries. So I didn't know it had subsidiaries. Engages in owning and chartering of container ships under fixed rates charters. So we remember that it owns 68 mid-sized ships and ranging from 2,200 to 11,020 foot equivalent units. The aggregate capacity of 375,000. So I said yesterday that there was about 70 ships, and they can hold about, let's say, about just over 350,000 TEUs, which means that each ship holds about 5,000 TEUs. It's a bit more, but call it 5,000, 5,500. And the company was founded in 2007, so right now in 2025, it's just under 20 years old, and it's based in Athens, Greece. So yeah, we can look at the sales. So 2009 it was 149. So one thing I like to do is how long does it take to double? So it's around 1 in 50. And how long does it take? So it's pretty much flat in sales almost until 2015 with some slight growth. Still flat, still flat, still flat. And then 2019 we start to see some growth. And then, so if we look between 2018 and 2020, it almost doubles in size. So do we see, and funnily enough, during that period we see gross margins shrinking from like 70% down. No, it's pretty much flat actually. But actually, with this growth, it's doubling in size. So 160 million in sales to 280 million in sales, and then sharp compression gross margins. But that might be some sort of like COVID thing. Interestingly, but so gross margins have compressed, but operating margins have stayed the same. So that means that operating margins have actually shrunk during that time. Okay. So we go back here, then it's actually 43% operating margins. It's dropped to 40. Okay. And now we're back at sort of 50-54% operating margins. There's an interesting sort of dynamic going on here, especially like so you got the same between 2021 and 2024, where you've got sales increasing about 75% and gross margins expanding 64 to 70, but operating margins actually compressing. That is odd. So operating margins compressing, net income margins expanding to 47. Yeah, and net income has grown from 170 million to 380. So let's have a look at the big thing in this, which is price to earnings ratio, which looks really cheap. Go back to 2009, trading at 2 times earnings. 2011, it's like 11 times earnings. It's more normal for a business. 2012, it's 5 times earnings. And when it was that cheap, it was sort of like trading at $23 a share. Yeah, $23 a share. So if you had bought it then, between 2012 and 2013, shares more than doubled to $48 a share. And that multiple expanded. And then in 2014, what we saw is the net income margins compress massively, 23% to 4%, and that's what caused them. The share price didn't drop that much. Share price dropped from 48 to 36, about 25% drop, a 4x increase in the multiple. Yeah. So net income drops from 33 to 6, it's about 80% drop. So it means net income becomes 1/5 of what it was. Shares only drop a quarter. And a fifth of a quarter. And so the multiple expands 4x. And you see the free cash flow over here. See, what's interesting is that there's no real capex going on in this business. 93 million in 2019. Big capex in 2021. Actually, 470 million, and then 2023, 152 million as well. So do we see jump in assets at that time? 2021. So debt. Yeah, so debt's been paid down. So it's about 600 million in debts. Let's see how much cash it's got. 230. Yeah, so net debt of 420 million. 420 million. It's net income of 320 million. It's really not that levered. Just over 1 times earnings. Retained earnings 700 million. So it mustn't be paying out too much in dividends. So over here we've got the graph, so you've got this like really low PE multiple. It does raise the question, I mean, you've got a business that's trading at a cheap PE multiple, but why is it trading at such a cheap multiple? What's going to cause it to increase now? Share price has pretty much drifted down recently to $22 from $29 in June last year, but what's going to cause it to go back up? I mean, making the case that it's going to be on earnings multiple, given it's been trading at 2 times the past 2 years. It's a bit of a hard case to make. Earnings, yeah. So March 24.